What I do agree with that quote that you just said is the inverted yield curve. Mm-hmm. That is that's probably a 98% predictor when it becomes severe and as inverted as it is. And then for listeners, all an inverted yield curve is, in normal, everyday psychological times, if I'm going to loan you money for 30 years, I want a higher rate of return than if I'm going to loan you money for a week, right? Because there's more risk. Well, when that flips, when you can borrow money, long-term, cheaper than you can short-term, what that's saying, that's a psychological profile of investors on average. And what it says is people are spooked. Well, let's talk about why people get spooked. It's pretty simple psychologically. They get spooked because they get confused. Smart people, there's not one smart person on the earth right now that can tell you precisely what's going to happen. Or more specifically, when what they think is going to happen. I've been bracing for a pretty hard stock market fall and just market fall in general because of inflation. But the thing is, we don't know exactly when that's going to happen, but it's inevitable that it's going to happen, especially as the yield curve becomes more and more and more inverted, because you can't sustain a time preference, an average time preference in a market in that particular manner where long-term paper is cheaper than short-term paper. Right. It's the hallmark of irrationality, and it's just not sustainable. Something has to break. Everybody knows that that in general, asset prices are overvalued. Mm-hmm. We just don't, and when you drill down, yes, of course, some are undervalued, some are overvalued, but on average, we have a bubble, and we have a bubble in several areas. We have a bubble in the derivatives markets. I see another 2008 brewing because all these derivative instruments have been up, all during the pandemic, all during inflation, and that's unsustainable. They're going to have to pop it at some point. Even on YouTube, social media, you can get on and look, and you have people, strippers are buying rental houses and things like that. To me, it's 2007 all over again.
Mark, give me your take on this comment. It says the U.S. money supply, which measures safe household assets and businesses can use to make payments, has fallen abruptly since March and is negative for a yearly basis for the first time since 2016. It says all the while banks have started enforcing stricter lending standards. It says, quote, the damage is done and the fallout is likely still ahead of us, unquote. The analyst writes, cautioning that the Fed's aggressive interest rate hikes over the past year can take up to 2 years to ripple through the economy. And this last part, it says already mortgage payments as a share of income have doubled from 13% to 26%, and the savings rate has plummeted to almost zero. Is it really baked into the cake like this, where we see the effects of this stuff years, or is measured in years, not necessarily in short term?
We printed so much money even before the pandemic, we were printing money, and then we escalated it. During the Trump presidency, that was escalated. And, to be fair, Biden and Trump only have so much influence on what the Fed does. But regardless, at the start of the pandemic, the Fed was already doing quantitative easing, and then they just ramped it up. They printed so much money and dropped it from helicopters. And so I think it was 2 years ago I was on, or 2.5 years ago, and I was preaching inflation. Yeah. And because it's inevitable. The problem is the impact of inflation isn't immediate. It trickles down through the economy. And if you have money and assets and you don't have to depend on work as your primary way of putting bread on the table, there's things that you can do to actually prosper during inflation. But the regular, normal, middle class, lower middle class, working poor type person, there's very little that they can do. They get none of the benefit of inflation, and they get almost all of the cost as it trickles down through the economy. And that's one of the things that I like to, as you know, that I greatly dislike. It seems to me that government tends to want to protect the people that already have a lot of money rather than, and I'm not talking about transferring money, I'm just talking about their policies. They seem completely unconcerned about the working poor, the lower middle class, those groups.